Hello and welcome back to The Rate We Hike. My name is Mike Shanley, financial advisor with Walnut Peak Financial Consulting, and today we're going to cover stocks. In short, a stock is a security. So you might be familiar with the SEC, Securities and Exchange Commission. They oversee, obviously, securities in the exchanges that they trade on. Securities cover equities, debt. So equities would be stocks, debt would be bonds. They also cover derivatives and hybrids. Those are things that maybe your typical investor wouldn't be as aware of. But equities, stocks, sometimes equities would fall under industry jargon depending on who you're talking to, maybe the client, and where their education level of financial literacy would be at. And so it is important to maybe separate those two depending on who I was talking to anyways. And so if you refer to them as equities, if you think back to the last video that I did on mutual funds, I talked about how you would have a basket of stocks, or so a basket of equities. And so you have a basket of companies, right? Or percentages, representations. So the way that I guess I could say it differently is that a stock represents ownership of a fraction of the issuing company. So the owner of a stock receives profits and assets that are commensurate with the percentage of the company they own. So to give an easy example, if a company issues 1,000 shares of stock and you buy 100, you have a 10% ownership of the profits and things of that nature that come from the company, right? They share 10% of the profits in that company. So that becomes the value of the company. So your stock rises commensurate with the company. And so that's how your stock goes up, and that's how you take advantage of how the stock goes up. When stocks are issued, they are issued to raise capital for the company. So everyone's familiar with Facebook. I thought Facebook would be a proper way to introduce or share what that might look like. So in 2012, Facebook, which is now Meta, did their IPO, or what's called an initial public offering. It's obviously a much grander scale, but they issued 421.23 million shares at $38 a share. So that raised $16 billion. Currently, they have a market capitalization, which means a value of $200 billion. It makes them one of the largest companies on earth. However, they now have 2.6 billion shares outstanding. So they cut shares and continue to give out more shares. Those are things that continually happen with shares as well. They will divide the shares up so that they can give more shares out to people. Some people look at that as a good thing. However, depending on what area you fall in, stock splits are a good thing. Sometimes they're a bad thing. With that being said, stocks trade primarily on exchanges. You're probably familiar with the New York Stock Exchange. You're probably familiar with NASDAQ, but they do trade off exchanges once in a while as well. It's important to note the difference between having a representative percentage in a company as ownership and actually owning the company. For example, if you owed money to the IRS, if you were in some kind of credit issue or debt issue where you owed money, you couldn't walk into the offices of Facebook and start collecting office furniture to sell off so that you could pay your debts, obviously, if that makes sense. So you have a representatory ownership in the company so that you can take profits and value from the company. Additionally, there are two main types of stocks. So you have common stock, you have preferred stock. Common stock gets voting rights. Preferred stock does not get voting rights. Common shares participate in dividends, and again, they get the right to vote. Preferred stock actually may get the opportunity to participate in dividends before common shareholders do. Preferred stock owners also may have the first rights to liquidation should the company go bankrupt. So those are two things that are worth noting about the preferred shareholders. I guess the last thing that I will add about stocks is that once you do own stocks, obviously the very basic knowledge about stock, you buy stock, you want to hold it until it goes up. Basic stock knowledge. However, what you can do with stocks is really interesting. You can short stocks, meaning that if you think a stock is going to go down, if you think it's going to lose its value, you can actually make I hate the word bet, but you can make a bet on that, and you can take advantage of that. And then there are things called options. I feel like it's all over the internet. People just telling other people to get into options trading. It's incredibly challenging and difficult, but what you can do with stocks is very creative. I would say for a novice investor, however, it makes the most sense to buy and hold. For everything else, please talk to a financial consultant. And of course, ultimately, if you want to stay up to date with Walnut Peak Financial Consulting, please click on the subscribe button, hit the notification bell, and for other social media information, find the links in the description below. Thanks so much. We'll see you soon.